So, welcome to our conversation today on lessons in resilience, navigating business in Africa during COVID-19. This is the second in the Lauder Africa Fall webinar series. My name is Lindsay Farrell, and I'm a senior lecturer in anthropology and the director of the Africa program at the Lauder Institute at the University of Pennsylvania. I'm joined today by a business leader and a scholar who are going to help us understand how COVID-19 is playing out in the business environment for the majority of Africans today. The idea behind this call was to try to understand resilience as it's playing out in African economies. Despite dire predictions, COVID-19 has surprised observers who imagined that lack of access to health services and high population densities in cities might drive case rates on the continent. But we're seeing headlines about Africa defying nightmare scenarios, giving the world a lesson on response, and holding off the worst. And indeed, comparatively, the majority of African countries have kept the pandemic case rate much lower than expected. But today we want to talk about how the pandemic is affecting African entrepreneurs whose enterprises churn economies and provide livelihoods. And I wanted to learn from an enterprise that is continuing to find growth success despite the predictions of economic fallout, and also about how the pandemic is affecting small and medium enterprises, which remain the bulk of economic livelihood opportunities for most people. Joining me is Aditayo Bamiduro, the co-founder of MaxNG, a Nigeria-based mobility platform that connects users to vetted motorcycle taxi drivers via a mobile app and provides logistics support for small businesses. The venture trains and employs hundreds, actually maybe thousands of young workers searching for opportunities. With foundational experience in technology and finance companies, Tayo has a bachelor's in computer science from the University of Ibadan and an MBA from the MIT Sloan School of Management. He's a Legatum and MasterCard Foundation fellow. And Constantine Manda is co-founder and inaugural director of the Impact Evaluation Lab at Tanzania's Economic and Social Research Foundation, and a PhD candidate in the Department of Political Science at Yale University. Prior to Yale, he was the senior research analyst at Twaweza, where he worked on randomized controlled trials aimed at improving education outcomes in Tanzania. He's consulted with various organizations, including RAPOA, Tanzania's Financial Sector Deepening Trust, and the World Bank. And he teaches impact evaluation, political economy, and development economics at the University of Dar es Salaam, the African School of Economics, and Strathmore Business School. And Constantine is also a World Economic Forum Global Shaper. So welcome to both of you, and thank you so much for joining us today. Just a quick note to our audience on formatting. We're going to spend the first half on general commentary with our guests, and then open up the conversation to your comments or questions. Please type these into the Q&A tab below and vote on questions that are the most interesting to you. So to start off, I'm going to ask you both to introduce yourselves a little bit, but mostly share some opening remarks. Tayo, on how COVID has affected your business, and Constantine, if you could share some initial remarks on the research you're doing on small and medium enterprises in the wake of COVID. And then I just really quickly want to note, Tayo, that we're having this conversation against a very immediate backdrop of the End SARS protests that are happening in Lagos, and I hope your family and your employees are safe. Yeah, so thanks. Do you want to start? Can you start, please?
Fantastic. Sure. Thanks, Lindsay, for the opportunity, and glad to have a chance to connect with everyone else. I'll make this very quick. My name is Aditayo Bamiduro. I'm co-founder and CEO of a company called Max.ng. And what we're doing at Max essentially is we're building a platform that essentially provides financial inclusion in the mobility space. And at the same time, we're also driving innovation in terms of introducing cleaner vehicles, right? Essentially electric vehicles into the 2- and 3-wheel mobility space in Africa. I and my co-founder started the company as grad students while we were studying at MIT Sloan about five years ago now. And it's been quite an incredible journey fixing not just mobility, but some of the underlying challenges that face transport operators on the continent. We're based out of Nigeria. We currently operate out of about 7 cities now. And you know, we're excited about the work we've done, but we're also very excited about the future. Now, against the backdrop of the End SARS movement, that's sort of like is not very surprising because when you look at Nigeria and a lot of other sub-Saharan African countries, there's been underdevelopment and insufficient investment in infrastructure, in education, and healthcare over the last several decades. And it's a lot of these gaps that startups like Max and a host of others are leveraging technology, innovation, and new business models to try to fix these problems. But glad to be here and look forward to an exciting conversation.
Great, thanks. Konstantin, do you want to introduce yourself a little bit more than I did and maybe give some backdrop to the research that you're working on?
Yes, I mean, the introduction was fantastic, Lindsay. Thank you very much. So I have basically to try and kind of motivate some of the discussion, some research that I have been doing. And there are kind of two sets of results here that I hope will help frame this discussion. The first set is kind of using publicly available data that doesn't necessarily is exclusive to just businesses across the continent, but individuals across the continent. So the kind of two sources of data set that I've been kind of using, and I wrote a news article here in a local daily in Tanzania, leverages data from Google Mobility data set, which basically tracks your location on your smartphone device. If you are allowing that Google to track your movements. And this data is available for 28 African countries. And so I kind of wanted to see, one, how Africans were responding to both the initial declaration of COVID-19 as a pandemic by the WHO on March 11th of this year, but also whenever the first case was reported in their country and their first death, to try and see how Africans were responding. And almost clearly across all these 28 African countries, folks did move away from occupying public spaces. So they went to retail shops less often. They were more likely to be residential and sedentary at home, which is already kind of showing the kind of voluntary reaction and response to COVID-19, even before a lot of these places instituted a lot of these lockdowns and restriction measures in terms of movement. However, there seems to be a much bigger response after the first case. So I think this is very common across the globe, where I think a lot of people didn't yet have a sense of how big of a problem this was until that first case comes in. And there doesn't seem to be much more of an adjustment whenever the first death is reported. In terms of the kind of specific data to think about how businesses are responding to the pandemic across the continent, I was lucky to be involved in a kind of proprietary data survey analysis that focused on 4 African countries: Nigeria, Zambia, and several, and a couple of others. And so, what are the kind of 3 takeaways that may help frame the discussion? So the first is that living under a lockdown matters. So although the longer you exist as a business, from that initial point where you have that first recorded case in your country, makes people kind of more likely to experience shocks. The longer that one stays in a lockdown, they become less likely to lose income. They become less likely to gain in terms of expenditures, increase in expenditures. These are all good things, and it makes sense. If you're experiencing a lockdown, you're unlikely to be incurring any expenses, and you're unlikely to also necessarily be losing money. And they're also kind of less likely to use an emergency fund. So a lot of the businesses were asked, to what extent are you dipping into some sort of emergency fund to be able to cope with the crisis? However, the lockdowns are not good from a kind of psychological point of view. So when you ask these business owners, how confident are you that your business will recover the COVID, the pandemic? Business owners who are under a lockdown are kind of more likely to be less confident about the future. Now, whether these expectations will meet reality will depend on policy interventions, will depend on how the international community kind of reopens their economy to re-engage with Africans. The second kind of takeaway, besides this confidence rising over time for a lot of the folks, except the ones who are experiencing COVID, is that the emergency fund spending, right? So dipping into this emergency fund is more likely for businesses immediately after that first case. This, I think, I was trying to understand this result. I think one of the ways to think about this is that a lot of the business owners immediately after COVID-19 entered their countries, I think did not anticipate the duration of the pandemic. So they started dipping into that emergency fund early on, I think suspecting that, within the next 6 months, within the year, this won't be a problem anymore. And so, it's okay for me to dip into the fund now. They have certainly dipped into that fund less so because they've started to now realize, this is gonna take a lot longer. Why does this matter? This matters because people responded before any government responses on trying to help businesses and individual Africans. So to the extent that this sample of 4 African countries, Nigeria, Zambia, Ghana, to the extent that these business owners kind of miscalculated the length of the pandemic, it's going to matter to the extent that their governments were able to inject capital and be able to kind of smooth out the immense length of time that they've had to kind of have to dip into that emergency fund. So I think those are the kind of 2 critical things that folks should think about. I think on the one hand, lockdowns are clearly very helpful in terms of reducing kind of loss of income and increases of expenditure, but they're not very good from a kind of psychological point of view. Folks who are under lockdowns, business owners who are under lockdown are less likely to be confident about their businesses' chances of recovering or surviving through the crisis. And then this result on the emergency fund is potentially alarming, but there seems to be some resilience given that a lot on average, for business owners who haven't experienced strict lockdowns, they're fairly confident as the pandemic has progressed. But it's just the subset of business owners who've experienced a lot of restriction of movement. And we know from the kind of consumer side, from the Google mobility data, retail is one of the biggest categories where people have kind of dropped in terms of accessing retail shops. Groceries hasn't dropped as much because people still need to go buy groceries, but certainly to the extent to which we think about existing inequalities, for instance, on gender, women are more likely to be selling fruits, and they are less likely to also be in the digital fruit market. To what extent this will exacerbate some of those inequalities before COVID-19.
Great. Oh my goodness. Thanks, Constantine. You've given us so many things to think about. Tayo, I don't know where you went, but I hope you come back because I would love to hear specifically as a business owner and bigger than probably some of the business owners that Constantine has really been focusing on, which are small and medium enterprises. I know that MaxNG has responded and pivoted to try to support the SMEs in your network. So can you speak a little bit about the effect that COVID's had on your business, but also how your business is trying to support and create opportunities for businesses in your network?
Sure, happy to dive into that. So apologies, for my video has been going on and off. Had a bit of a technical issue there, but it's all set now. So the impact of COVID on our business. Part of the work that Max does, is to bridge that access to finance gap for a lot of motorcycle taxi drivers. So the problem is pretty simple. These motorcycle taxi and tricycle 3-wheel taxi drivers don't have access to funding to be able to procure their vehicles with cash, right? It's too expensive for them. So what Max has done is to create a scheme that allows them to be able to get access to these vehicles and then eventually own them over a period of about 12 to 18 months on a lease to own model, right? So they pretty much pay as they generate revenue. So essentially we're taking away that access to finance barrier. Now, the way we've done that, right, is to build partnerships directly with manufacturers and partnerships directly with microfinance banks and other lending agencies
that on the credibility of Max, make funding available for these vehicles to be procured. Now, in order for us to continue to unlock more funding, it's important that drivers pay back so that we can then on their behalf service their loans, right? And then use that to unlock, build credit history for the drivers, in turn build credit history for the program that we've created for these drivers, and then use that to unlock more funding in the future. Now, the challenge is when the pandemic hit, right, the drivers could no longer work just all of a sudden. And if the drivers can't work, they can't generate revenue. And if they can't generate revenue, they can't make payments to Max, and then Max in turn, would be unable to service their loans. So essentially during that period of about 2 to 3 months in Nigeria, when, there was, near 100% lockdown, and, there was, basically zero movement from a transportation standpoint, right? And Max had to then use its own, cash reserves, right, to keep those loans moving, right? So even though the drivers were not paying us, we were required to continue servicing those loans in order to keep the ratings of the loans and all of that intact, because in the future it might be very hard to unlock funding if we don't build a strong credit reputation, right? So that impact was very significant for the company, but also for the drivers. Now, if you look at a country like Nigeria, and this applies for most of sub-Saharan Africa, till today, 80% of the economy is still informal, despite our huge growth in mobile phone subscriptions, right? I was going to say smartphone subscriptions, but I corrected myself. They are mobile phone subscriptions. Most of the phones are still not smartphones that are used by people on the continent. They're feature phones, right, that can't do very sophisticated applications, right? So because most of the economy is informal, our drivers and a lot of players in the economy, they live from day to day. They survive on the basis of the money they make today, right? So they don't have savings, they don't have access to, they don't have credit cards and all of that. So the challenge, that represented for not just our drivers, but for almost everyone who works in sort of like some sort of para-informal or informal industry, is that they don't have money, right? So now, not only did a lot of our drivers not generating money, we also had to then start, providing care packages to them, right? So at some point, we had, I'd say we had just 10%. At the lowest point, we had just 10% of our entire fleet across all the cities that we operate in that were active. Now, the only reason why those drivers remained active was because we created there were opportunities for them to do package delivery. Now, the great thing about a motorcycle or a three-wheel taxi is that it has multiple use cases, right? You can use it to move people around. You can also use these vehicles to move packages around, right? So the demand for delivery increased, of course, during the pandemic because everyone was indoors and people, were mostly ordering things. I'd say, middle-class people were mostly ordering things. Lower-class people don't even have any money to order anything, right? So we were able to then keep a small percentage of our drivers across all our cities active, but still, in the grand scheme of things, a lot of our drivers were out of work for that period. So we had to provide support for them. We had to dip into our own cash reserves, right, to keep servicing the loans with the financial institutions, right, to preserve their credit ratings. And then, as the lockdown was gradually eased, we've started to get back to normal, right? It's not there yet. We're kind of like still on that journey. But yes, we've had to, live out our mission in terms of providing support to our drivers, during the most vulnerable parts of the periods of the pandemic.
Can you speak a little bit to the interventions beyond just the dipping into your own cash reserves and finding kind of pivoting away, to do delivery and logistics? Tayo, is there another sort of approach? I feel like I saw something on your website about the support for SMEs in other ways, or are you finding that? Okay, that's one. Is there support for SMEs another way? And what does it look like right now? What's happening now? I mean, now that the lockdown's over, how are things looking?
Yeah, great point, and great questions. Yeah, I get carried away talking about our drivers so much, but yes, we do have other customers and stakeholders that are, rely on us for a lot of help. So you mentioned that small to medium businesses, right? We signed up a lot more of them than before during the pandemic, right? Because now they needed support, they needed logistic support to be able to get their products, right, from their stores and their warehouses, right, to customers who are ordering via their smartphones, or via the internet, or even via platforms like Instagram and WhatsApp. Those are like hugely popular with small and micro businesses in Nigeria and across all of Africa. So yes, we are. In fact, we went a step further beyond providing logistics to actually building digital storefronts as well. I signed up quite a number of businesses, helped them list their products on our website. So it was a very seamless experience. Their customers would simply just go to the site that we created for them for their store, place orders, and then we'll dispatch our champions. We call our drivers champions to go pick up packages on behalf of the SMEs and then deliver to their customers, right? So we innovated by building a digital storefront, right? And integrating that with a lot of the small businesses. But even beyond that also is we actually also rolled out a new product, which was an intervention essentially for government. Now, especially as a result of the pandemic, right? The governments in southwestern Nigeria were very concerned that they couldn't enforce the right protocols and healthcare standards and all of that that's required for motor taxi drivers to be able to operate safely, right? Ensuring that they were wearing face masks, that they had hand sanitizers to wash their hands on a regular basis, that they maintained took as much precautions as possible while still carrying out their business. So that was very hard for the government. Dealing with the informal industry is always very hard. So we built a platform that allowed us to help the government solve some key aspects of this problem. Number one was that of enumeration, right? So if you know a little bit about the informal sector in Africa, a lot of the players there, they're not registered, nobody knows them, they're not licensed, there's no data on them, right? So we built this platform that allowed us to capture data on every single informal motor taxi driver in a city, right? And then we pitched that to quite a bunch of the governments in southwestern Nigeria. Now, they normally would not, take us seriously. They would not be open to ideas like that. But as a result of the pandemic, right, the governments were a lot more open to especially any technology-driven ideas that would allow them to take care of the people a little bit more, have access to a lot more data on people and informal, actors to be able to then deploy, interventions and even enable things like contact tracing, right? So we achieved, we saw remarkable progress. And right now we've actually deployed the technology platform for one of the southwestern states in Nigeria that has well over 120,000 informal motor taxi operators, right? So it was exciting that we had an opportunity to extend, capabilities and technology that we had built for our own internal use, right? To solve important problems for government, right? And that was very exciting. So yes, as a result of the pandemic, right, we expanded our support to small to medium businesses. We created, programs to keep our drivers going, and then we deployed a B2G, business to government platform to capture data on informal motor taxi operators and make sure that we were, the government was in a much stronger position to deal with complications that might arise, especially out of the transportation sector, because as you know, the informal transport sector interfaces with nearly 100% of the population, right? So if something goes wrong in that sector, its knock-on effect can be extremely, catastrophic. So those are a couple of the programs and initiatives that we worked on during the pandemic.
Amazing. What I'm seeing a lot especially in e-commerce or mobility, in other sectors and other places, is this possibility of piggybacking on the technology you're building to deal with some state development goals, which it sounds like the Nigerian government has attached itself to you in order to achieve. I saw somewhere else that we had talked about in an earlier webinar that the Nigerian government was using cash transfers or quick influxes of cash as a way to also achieve some of its national ID goals, is to get more people registered through what we're seeing in other places too through these mobile networks. Let's move back to Konstantin, who was looking at data that's related to the technology space. You did mention, and I think it kind of a segue from the B2G, the B2G opportunity. Where are you seeing some governmental policy changes? I mean, as much as businesses are pivoting and shifting quickly and innovating, have you, in the research that you're doing, seen other interventions where governments are making quick policy decisions and like trying to support the SMEs that you're looking at?
Yes, I mean, it's going to be obviously difficult for a lot of African governments to respond. And I think this goes back to this very huge debate about to what extent should the African governments mimic the policy responses that we're seeing in Europe and other places. The Center for Global Development have a really great paper with applications to Uganda, and Justin Sandafor and others there have written this amazing paper arguing basically, given that we are seeing increasing evidence that infection rates are not as fatal in Africa, given that we know that the labor market in Africa is such that very few of these jobs, particularly some of the kind of engagements and enterprise that Tayo is talking about as well, in the informal sector, are very difficult to be done at home. So if you implement a stay-at-home measure, to what extent are people trading off their livelihoods for really marginally small risks of fatality to COVID-19? And this matters because a lot of the jobs that people are working are not the ones that you can do digitally, that you can just sit with a laptop and do it. And so one of the ways that governments have been doing it, at least insofar as in the cases that I know of, in particular in East Africa, in Tanzania and Kenya, is to make it cheaper and more convenient for folks to avoid using hard cash, for instance, through transactions. So they have tried to reduce the fees that mobile network operators are charged by the central government, but also that they don't, that they would in turn reduce the fees that folks have to incur when making mobile phone transactions. But also I think there is a lot of need to invest in human capital in education, particularly to ensure that Africans are able to transition into a more digital space in the way that they make money, both kind of self-employed individuals, employed individuals as well. Why does this matter? It matters because even before a lot of these places, as I said in the data, even before a lot of these places instituted these very strict lockdown measures, people withdrew from transit, for example. There are countries on the continent where the reduction in transit is a whopping 60%. And so the kind of experience that Tayo is speaking of in the transportation sector, that's one of the biggest sectors that were hard hit. When I took a look at the Uber data for Cape Town and Nairobi and other selected cities that I could find the data on, you do see an increase on the average speeds of these Ubers because there's basically nobody on the street. So you don't have the same kind of traffic logjam, which kind of shows that there's been kind of a reduction in people using public transit systems. And this matters because when you compare the experiences and the policy responses across the continent, one of the kind of more infamous example is Tanzania, where I'm from and where I am right now. And Tanzania refused to kind of institute a lockdown. And whether or not that was a good decision is yet to be seen. But I think we see this in the data, even when the Tanzanian government hadn't yet been very explicit about this, there is differential responses across the continent from Nigeria to South Africa in terms of how quickly people were moving away from public spaces into those private spaces. This matters because a lot of the grocery shops, a lot of the retail shops depend on foot traffic. And so if people are not occupying these transit stations where you would be buying some sort of fruit from the kind of local fruit vendor, you're going to see decreases in business activity. But I think one of the more successful interventions, I think, is to try to go as much as possible towards a cashless economy, which a lot of the East African economies have done so well with, M-Pesa in Kenya, and elsewhere as well with mobile phone platforms, but also to kind of digitalize as much of the economic activity as possible. I think that, to me, over the next 5 to 10 years is one of the big lessons for COVID-19 for African governments.
Great. Yeah, thanks. Actually, I see a question from Carolina about financing, and Tayo, I want to get to that next, but because we're still sort of talking about this digitalization and the opportunity of COVID in digital, I wonder if you can speak to some lessons specifically about the building of this digital marketplace that you built for your SMEs and your network. Was this, sorry, Constantine mentioned the education around digital as being kind of a barrier. I wonder if you can reflect or speak to the ease in which people made this transition during COVID-19 to more digital spaces, and if there's any lessons and what still needs to be done.
Okay, sure. Happy to speak to that. So, it wasn't hard, right? Because a lot of people were already used to ordering things online. But if you look at the demography, what section of people or the populace, right, could easily switch, right? You had to have a smartphone. You needed to have a data subscription, and you needed to be able to afford a data subscription despite the impact of the pandemic, which pretty much narrows down that band to roughly, I'd say, somewhere between 10 to 15% of people who live in Lagos. If you look at the entire country of Nigeria, probably 10% or slightly even less than that, right? So it was easy for people who are already digitally literate, right? But that economic factor is also extremely important in ensuring access, right? And that is the problem that we've had, even pre-COVID, right? Around access. A lot of the challenges that you find in developing countries like Nigeria and much of sub-Saharan Africa is access to basic resources like the internet, or affordable internet, to be more specific, to the right devices that allow them to be able to connect, and other things like that, access to affordable healthcare and so on and so forth, right? So, one of the fantastic things about mobile money, especially in East Africa, and I think Ghana and a bunch of other countries in Africa that have really adopted mobile money, is the fact that you can transact via almost any kind of mobile device or any kind of mobile phone, right? It doesn't have to be a smartphone. It doesn't even have to be a feature phone, right? But unfortunately, for slightly more sophisticated services like e-commerce and ordering stuff online, there's still that significant challenge and barrier to enabling that to providing access on 2G devices. So on the one hand, yes, we did quickly innovate and we built digital platforms to provide access to small to medium businesses, but it was still out of reach for most of them, most Nigerians, unfortunately.
Let's get to Carolina's question. And actually, when we had been prepping, I wanted to chat with you about the financing side too. Can you speak to how you were able to, how you've been able to manage investment? You very recently had some success in raising a private sector bond. So can you speak a little bit to that, just what your financing has looked like in COVID?
Sure, absolutely. So in the middle of the pandemic, right, our focus was a lot more on reducing, burn, reducing spend, and just essentially, the focus was on capital preservation, right, while still meeting, our most essential and most critical obligations, right? But pre-COVID, we have been working on a few financing partnerships, right? One was the private bond, that Liz just referenced. We have been working on that actually for about 2 years, right? And then also we have been working on unlocking new, financing directly from suppliers, right? So if you look at the continent, a lot of manufacturers, most manufacturers, when they bring their products, and I mean auto manufacturers, companies like Honda, Yamaha, and so on and so forth, when they bring in products onto the continent, right, it's cash. They get cash from local dealers or local dealerships who then go on and sell to customers locally, right? So what we were trying to do, or what Max tried to do, was to sort of like break that, move away from that legacy approach, and partner with manufacturers directly to extend credits to drivers through Max, right? But that required a lot of work. That required a lot of transparency, reassurances, and credit enhancement, and all kinds of systems that we had to put in place to provide sufficient confidence for global manufacturers to be able to take that risk. Because the truth is that when you do that in a country like Nigeria, you are taking a significant risk, right? So we have been working on those before the pandemic hit, but after the pandemic hit, it was even more important for us to actually unlock those new financing channels. And thankfully, because of the track record that we have built and the relationships that we had also built pre-COVID, even though there was significant dips in numbers and a bunch of other metrics that you might use to make a decision on whether to extend financing to a company, right? That trust was extremely valuable for us with this new prospective financiers. And of course, during the pandemic, everyone was spooked initially, but after we started coming out of the lockdown gradually, right, we were able to resume conversations, and then eventually we unlocked financing. So I'll talk a little bit about the private bond. The private bond is very exciting for us because it allows us to do two things mainly, right? Number one is it allows us to cut the interest rate on financing. Pre-COVID, pre-private bond, the credit lines we had access to with our partner institutions in Nigeria, we're looking at rates exceeding in excess of about 28% per annum. And you didn't hear that wrong. You hear that correctly. 28% per annum, right? But with the private bond, we essentially were able to cut that in half, right? To about 15% per annum now, which is very exciting for us because not only does it reduce the cost of financing that for Max also in turn transfers some of the savings from the lower cost of financing to the champions and to our drivers, right? And that is part of the mission of Max fundamentally, which is to cut down the cost of financing by leveraging our technology and providing greater transparency into a historically informal and opaque industry. So the private bond allowed us to, number one, drop our cost of borrowing, but also it allowed us to unlock an evergreen financing channel. What I mean by that is the way it actually works is it's a refinancing scheme. So essentially what happens is, we access capital from some other source. We use that capital to procure vehicles. We provide those vehicles to drivers. After about a month of building of those assets generating cash flow, we then are able to securitize the future cash flows from those assets and use that to raise a bond in the market. So now that we've set that program, we've activated that program. The total program size that we activated was about $22 million in size. The first tranche that we closed about a month ago was about $1 million. But every quarter we would keep refinancing our new vehicle issuances. So it's a very innovative securitization program, first of its kind, that we implemented to help us drive down the cost of financing and also allow us to create this evergreen pool of a system that allows us to continue to support and empower more drivers.
Can I ask one more question about that? The funding is local, global? Who's buying into this?
That's a great question. So it's local and global. It's global, okay. Right? And I'll explain. So to get the program off of the ground, since it's the first of its kind and all of that, we needed to also put in a lot of credit enhancements, right? We needed to create a first loss tranche and a bunch of other things that we had to put in place. Thankfully, we've got a partner. One of our partners is a foundation called Shell Foundation. And they've been working with us very closely in fundamentally transforming mobility on the continent. So to get the program going, they put in about $1 million of commitments, right, that we will draw on progressively to unlock to continue to build and unlock this mechanism, this new financing mechanism. So Shell Foundation is a UK-based charity that has been supporting us for quite a while. They work with a lot of high impact entrepreneurs in Africa and in India. So yes, the capital is global and also local. We work with a local investment bank called DLM. DLM plays a lot in the impact space, right? They help high impact entrepreneurs or impact social enterprises to unlock funding mechanisms that allow them to reduce their cost of funding in order to deliver more impact. But of course, you need to have a compelling business model as well to be able to get that through. So we work with both local, very solid local and global partners who all are committed to not just the economic opportunity, but more importantly, the impact and the knock-on effect that this has on the informal industry.
Great, thanks. Thank you. I think the private sector bond, it's a little bit beyond my financial knowledge, but my financing knowledge, but comparatively to the pains of looking for investment, it seems like you've cracked something really interesting. Constantine, you answered the question with the text. Do you want to answer Reggio's question live?
Sure. Yeah. So Reggie, Mauricio.
You can ask it and then respond.
Right. Yeah. So Reggie Mauricio asks, if I can tell all of you more about the finding that living more under a lockdown decreases the likelihood of losing income, and whether this is true for the informal economy or whether it was different. And basically, yes, this is true for the informal economy as well. But as I responded to Reggie Mauricio on this, I don't want to put too much confidence on trying to kind of split the sample in that way, because the more you do that, you kind of lose the confidence statistically to kind of make inferences on the data. But I would say that it's likely to be true. And the mechanism, I think, behind why people are less likely to report losing income over time is that you have to think of COVID-19 as kind of a very immediate income shock at the beginning, right? So the moment you have a lockdown and the moment COVID-19 enters your country, that first couple of weeks, month, when some of these measures are implemented, you are going to take a big hit on income. What I hope people are interpreting that result is not saying that the businesses have not lost income. They obviously have, but as you have these measures being implemented, as we're kind of surveying people and seeing some of their data, including some of this Google mobility data, people are adjusting. And so over time, you're not losing money precisely because you are not incurring a lot of expenses. So although you have had experiences kind of one time and in some sense continuous negative income shock, you are also less likely to be incurring expenses, non-essential expenses. And so the net effect over time is that you may be less likely to report that you have been losing income. At least the folks in lockdown, that's why you get the expenditure effect. If you're not in lockdown, you're still kind of spending more and you're still losing more money. So those folks are experiencing a much more relative hit on their net income. But if you are in lockdown, you're kind of limited to the extent to which you can spend money in order for you to lose it. And I mean, I think one of the other things to kind of point out, given that I have the space, is that there's a lot of variation across the countries. As I said, for some reason, Tanzanians haven't responded as seriously as other Africans. So the Tanzanian response is typically about a third of kind of a Nigerian and a Kenyan response. And we can discuss what that means. But even within the countries, there's a lot of variation across space. There's a lot of variation when you look at urban versus rural in terms of how people have responded in terms of moving away from public spaces and staying more at home. This is also true when you look at small businesses across sectors. So the food and retail sectors are the ones that were hit the most, but are also the places where there's a lot of potential for them to be more into the digital space. And there's a lot of potential for them to be able to avoid a similar experience in the future. And I think that's the kind of spaces that I would hope African governments would try to look at, rather than having this kind of average research and average policy parameters. to really think deeply about interesting differences, either by the industry sector, interesting differences around gender in terms of who has access to the digital economy, and also how distances matter and transportation costs across Africa matter for how people are doing business. As I'm sure Tayo would know, given how expensive sometimes these transaction costs can be for small businesses.
If you guys have any more questions in our audience, please submit. We've got about 9 minutes left. I want to pivot just to think a little bit more about the future. Not that we can predict it, because even here we're sort of day by day wondering if we'll get out of this soon. But how are people, and this may be for both of you, but I think we'll start with Tayo. How are people preparing, planning, organizing themselves to navigate and work within the business environment of COVID? And that you could speak to, like, the level of company that you have, Tayo, which is much larger and growing rapidly. And I know you had some expansion into other countries that you were, hoping for. But also maybe you can speak to what you're seeing from just generally the informal, the SME kind of sector. What's the future going to be, and what is specifically, like, how are people planning?
Yeah, that's a great question, right? And you talked about the NSAS movement at the beginning of the call, right? And in Nigeria specifically, I'd say roughly about 70%, over 70% of the population is less than 35, right? So you've got this massive youthful population in Nigeria and across the continent. And there's a lot of concerns around whether this is a ticking time bomb or whether this is an opportunity, right? And that ultimately depends on what we do as a continent and what our leaders do and what innovators like myself do, right? If we're able to create platforms and systems that allow us to be able to, provide access to education opportunities, right, for a huge cross-section of our young people, or if, we're not going to be able to do anything about it, and then that, unfortunately has a lot of terrible consequences. So right now, especially in Nigeria, the mood isn't very exciting right now, this very moment, right? But historically, I think we've been quite resilient. When I say we, I don't mean the politicians, I mean the people. So there's still that hope that things ultimately will get better, especially with the opportunities presented by technology-based tools and innovation to be able to solve a lot of these problems, right? So look at education as well, which is a big. There's a huge gap, right, in there. Access to decent healthcare, there's a huge gap in there as well. And all kinds of challenges with financial inclusion, but the mood is there's still hope, right? There's hope amongst a lot of people, with a lot of innovators, small to medium businesses, right? That in the future it's all going to ultimately come together. But there's still a lot of concern as well around stability, not just from a political standpoint, but also in terms of being able to grow, being able to achieve your growth objectives in the face of of currency depreciation, in the wake of dwindling oil revenues, which means that the government also is an already inefficient and corrupt government now even has less resources at its disposal, and that also has its own knock-on effects as well on the people. So it's a mixed bag. People have hope, right? It's a Nigerian thing, in the local language, we say "Igo better," meaning that, no matter how tough it is, there's a chance things will still get better in the future. So there's hope, right? But it's sort of like cautious hope where people are a lot more careful about how they, how they spend, how they invest. People are trying a lot harder to make sure they de-risk and take less, risks that are uncertain, take less risks that are not justified to preserve capital for the things that are most important. So there's optimism, but there's also, you know, a lot of people being cautious as well.
I'm glad you brought resilience back in, because that's what we call the webinar. Thanks for bringing that back in. But that really has been the story of Africa and COVID, right? And that's what I wanted to sort of chat about and talk about, that despite all the dire predictions, despite, quickly right after it happened, McKinsey and World Bank and all of these people were predicting that Africa would fall apart. And yet, it's almost like Africa was ready and prepared for this challenge in unique ways that people still don't fully understand. There's a book that came out last year called the Utu Ubuntu, African Markets, the Utu Ubuntu, I forgot the rest of it. It's by a woman named Mary Kinyanjui, and her whole argument is about the logic, the internal logic of informal business, that it defies a lot of things that, a neoliberal or sort of a Western capitalist would see as like not very efficient or not very useful, but it's incredibly reciprocal, that these people, not just young, but that informal sector workers are really good at like mutual support, which we've seen in COVID is a big piece of resilience. That there is, there's a lot of trust built into those informal systems, and trusted in a period of uncertainty is incredibly important. So I thank you for bringing back resilience. Constantine, I wonder if in this work with SMEs, you can speak to a bit more about that African resilience.
Yeah, I think that to close, I think there are several lessons to draw from the experience that Africans have undergone through COVID. I think the first is a geopolitical lesson. I think we need to push for multilateral and unilateral donor agencies to not push these kind of isomorphic mimicry kind of policies where something that is going to work in Copenhagen is also going to work in Ibadan, and I think that matters precisely because there was a lot of pressure, geopolitical pressure on African governments to just replicate and copy all the kind of policies being implemented elsewhere. I think the second lesson for me, and this is where I'm most hopeful, I think, on this dimension on resilience, is that on average, Africans are fairly young. We know that age is correlated with digital adoption. And these young folks are healthier, relatively more educated than a lot of their previous cohorts. So if we this young, very kind of vibrant population that in so many ways has been at the forefront of the SARS campaign, I'm very hopeful about what the future holds for the continent. Sitting here in Dar es Salaam in Tanzania, there's absolutely a lot of high expectations with respect to the economy rebounding. And I think it's also a lovely lesson for African governments and African economic policymakers to think about to what extent our economies are dependent on external forces and to what extent we have kind of domestic sources of revenue. And I think the kind of economic growth figures that we're going to see over the next 12 to 18 months are going to be truly our own, because there's very little trade coming from outside. Because even if you as Tanzania aren't restricting movements, the rest of the world is. The rest of the world is still restricting its movements. And so, whatever we're able to produce in our economy this year is literally the most Tanzanian economy you'll ever see. And so I think there are lessons there as well for businesses in Africa.
Yeah, that's really interesting to be able to finally maybe see what it would look like if some of the taps are turned off, which is, what Dambisa Moyo and the Dead Aid was predicting or was advocating for. Turn it off and let's see what happens. Let's see what Africans can do, right? Wow, thank you both so much. We are out of time. It always moves so quickly. I am very grateful that the two of you could take time out of your busy schedules to join us today and give us some of your insights. To attendees, thank you for attending. We will be having these every month for the rest of the fall, so hopefully you can join us in the future. Really, thank you very much.
Thank you. Bye, Tayo. Bye, Lindsay.
Thanks. Glad to connect with you, Constantine. Thanks, Lindsay, and everyone who joined. Have a blast.
Okay, great. Thank you so much.